When cryptocurrency prices crashed in June, wiping out billions of dollars, Michael Saylor, one of Bitcoin's loudest evangelists, pledged he would continue to hold on despite the adversity that the price crash was causing. Perhaps a noble intention, perhaps not, but in his opinion, the crypto industry's vulnerability and flaw in its design were brought into the open by recent events such as the meltdowns at the Tara, the Luna exchanges, and the Wildcat exchanges, as well as those at FTT and FTX. So this begs the question, could Michael Saylor still look to Bitcoin in the future? Well, we'll see about that. Hello there people, welcome back to Econify. Today we're going to take a look at the man Michael Saylor and his new predicted investment move that's in the wake of the Bitcoin price crisis. So make sure to hit like and subscribe for this video and our channel, and we've got a lot in store just for you. Especially you, laying on your phone right there. So feel free to stay until the end of the video, and without further ado people, let's roll. So first and foremost, who is this Michael Saylor? Well, he's pretty hard to miss, but Michael Saylor founded MicroStrategy and also served as the company's CEO. Additionally, he is well known for being an outspoken advocate of Bitcoin and cryptocurrency. In fact, he is so much of a Bitcoin believer that his company MicroStrategy acquired approximately 130,000 Bitcoin for the company's holdings. Even more intriguing is the fact that a lot of Bitcoins were acquired by the firm, which had already borrowed against its Bitcoin holdings via a Bitcoin-backed loan to the tune of $190 million. Now, that's quite a lot of money if you ask me, and you could say that this Bitcoin advocate has, to put it mildly, staked his reputation on the currency. Michael Saylor felt the ripple effects of the FTX's demise on November 11th of 2022, and we recall that on August 11th of 2020, MicroStrategy issued a press release announcing the acquisition of over 21,454 Bitcoins at a total purchase price of $250 million to serve as its primary treasury reserve asset. So why the huge investment? Well, Saylor explained that his decision to invest in Bitcoin at this time was being influenced by a confluence of macro variables affecting the economic and business climate. That's what he sees as the root cause of the corporate treasury program's long-term dangers, the kind that needs to be mitigated as soon as possible. And now he's become MicroStrategy's chairman, but is still one of Bitcoin's most outspoken advocates, while the company itself has continued to amass Bitcoin. Following Saylor's September tweet announcing MicroStrategy's latest Bitcoin acquisition, the company now holds about 130,000 Bitcoins, which were purchased for $3.98 billion at an average price of $30,639. Saylor recently told CNBC that he and other Bitcoiners are stuck in a toxic relationship with the rest of the cryptocurrency industry. He also said that the lack of openness contributed to FTX's demise as a digital asset exchange, and in his view, a company's cryptocurrency holdings are its own business and no one else's responsibility. And now he thinks the current calamity is going to help hasten the introduction of much needed regulations in the cryptocurrency market, and that only a small number of digital assets, Bitcoin among them, will be able to satisfy the necessary regulatory framework. Saylor has forecasted that the cryptocurrency industry will soon enter a new era characterized by the participation of major institutions and companies, all of which will serve to propel the growth and value of Bitcoin. Of course, Saylor's mega bets have failed before, and in fact, this isn't the first time one of his has. A personal history of market meltdowns, even more dramatic than the one that has hit crypto markets, may explain his remarkable composure in the face of a 70% Bitcoin bust. And for a short time in 2000, MicroStrategy represented the last great tech bubble and subsequent bust. Investors were taken in by Saylor's predictions that data analytics would be given a huge boost by the internet, causing the company's stock price to soar before plummeting 99%. Unfortunately, when the company restated its accounts in March of 2000, Saylor saw more than $6 billion wiped from his personal wealth in a single day. Even though the Securities and Exchange Commission's investigation into Saylor was settled and he paid a fine without admitting wrongdoing, he still somewhat refuses to be drawn on that experience. So what's his next move? Well, Saylor has been open about how the most recent price decreases have sparked widespread panic and media attention. However, most individuals appear to have forgotten Bitcoin's historical milestones and price growth. He mentioned Bitcoin's average annual growth rate of 51% over the past 5 years, which also means that it's increased by 124% during the past decade. Plus, it's fared 10 times better than the Nasdaq in the past 2 years. Saylor has made the decision to buy the dip in the hopes that the present price appreciation patterns would continue. Moreover, MicroStrategy disclosed in the final week of June that it had acquired another $10 million worth of Bitcoin. The purchase brought its Bitcoin holdings to over $4 billion. Michael Saylor claims that a tidal wave of successful business leaders and wealthy individuals would soon abandon fiat currencies in favor of Bitcoin. He mentioned that although gold investors saw returns of 18% this year, Bitcoin investors saw returns of 290%, and this has been the case for several years running. For the past decade, actually, Bitcoin's annual growth rate has averaged at around 200%. That's really something to think about. The cryptocurrency industry is full of novel ideas, and there is potential in using a digital commodity which has the ability to send anything of value between 20 billion computers at the speed of light and to code it such that it settles at the end of the programming. Perhaps it's something that we can actually look into. What you might not have guessed is that over 8 billion people engage in value exchanges, and millions, if not tens of millions, of websites engage in value exchanges on a regular basis. Yet the huge potential here is still far from being realized. I'm talking about hundreds of times every second, thousands per hour, or millions per day. Bitcoin, in Saylor's words, is the first asset that may serve as a digital commodity, and Lightning is the first open protocol that we've seen open permissionless ethical protocol that has the transaction speed to traffic digital commodity. In addition, it's pretty common knowledge that digital commodities are very valuable items that can be moved from one digital location to another. But what's he saying about regulation? Well, if you're worried about what will happen when more countries join in and try to regulate the cryptocurrency market, Michael Saylor's response is simple. How many years do you have left? If you don't have enough years left to join the next technological advancement, then you're wasting time worrying about what might happen. Regulation is pretty much going to be a part of it as more and more people and then countries and governments get involved, and that might not be a terrible thing. A large number of people believe that rules improve confidence and guarantee legitimacy, which in turn attracts additional investors. Repeated calls for centralized management of users' cryptocurrency have been costly for many, and because of this, reports of widespread exchange withdrawals have surfaced. The cryptocurrency exchange wallets have seen more than 80,000 bitcoins leave in the past weeks, as reported by CryptoQuant, and investors are now taking their bitcoins out of exchanges and storing them elsewhere. What's more than 5 billion stable coins were reportedly transferred out of exchanges, as indicated by on-chain data analyzed by CryptoQuant. As the uncertainty caused by the FTX issue escalated, these numbers appear to be the highest since June 15th. However, the number of stable coin withdrawals from exchanges has increased to over 57,000 from a mere 7,016 from a week ago. Saylor still has faith that Bitcoin's value would skyrocket in the coming years, despite the lengthy bear market and the current drop of all crypto assets due to the FTX disaster. In June, he predicted that the coin's value would rise to $1 million, as he believed it to be a superior financial instrument to gold. And now, the same Bitcoin he boldly predicted in September could reach $500,000 in the next decade if it matched the market valuation of the yellow metal. Michael Saylor agrees that the price of Bitcoin could even reach a new record high within the next 4 years. Meanwhile, the collapse of FTX has severely shaken investors' faith in centralized cryptocurrency exchanges. This is in the wake of the subsequent financial turbulence and stories about the troubled cryptocurrency exchange using user assets to support dangerous bets. For Saylor, the recent pullback is merely an opportunity to buy at a lower price. He hopes that if he buys Bitcoin today, its value will rise in the future, boosting his profit. Well, you might say that time is of the essence to him. And that's quite the perfect way to end this video, because that is all the time we have for this topic. Let me know if you could follow the chaos of this whole ordeal, and would you invest in Bitcoin like Michael Saylor says? do drop your comments down below. And I want to thank you for watching this video. I really appreciate it. And if you want to be notified anytime we have new content, just click on the bell icon right there. Also, don't forget you can like and subscribe to Econify to get tons of amazing videos like the one you're watching. And until the next video, I'll be seeing you.